Hey, what's going on, dudes and dudettes? It's Pip Surfer with another daily update for the Cowabunga system. Today's Wednesday, December 9, 2009. Hope you all have had a great day, and just going to go ahead and get right into today's update. Of course, first things first, if this is your first time reading this, well, not reading, but viewing this video, obviously, you want to click on the link that's right above the video that says, if this is your first time visiting this blog, read this first. Click on that link. It'll give you the rules of the system. Learn it. Digest it, then come back, and these videos will make a lot more sense, because otherwise you won't know what's going on. So that's my little disclaimer, gotta say it. But with that said, let's go ahead and move right along. I have opened my 15-minute chart and my 4-hour chart for the cable. First thing I do is check out my trend on the 4-hour chart, and I'll move it back to before midnight so you can see what it looked like. Again, we're in this nice downtrend. Our most recent trend change candle was back on the 3rd of this month. And at the start of my day, there were no new trend change candles. Therefore, my trend was still down, and I was still only looking for short trades. And if I move through today's action, you can see that we did have some sideways movement, but again, no new trend change candles during our session, which means that the trend remained down, and we only looked for short trades the entire day. So again, another pretty simple day to figure out the trend. And we've seen this nice downtrend for a while, so that makes it a lot easier when it comes to looking for trades. So now I'm on my 15-minute chart, excuse me, and I'm moving it back to before midnight. And of course, before I start trading, I have to look at my news events. And if you look at babypips.com, you can click on this Tools tab, and it'll automatically pull up the news for the day. And just make sure that this time zone drop-down bar is on the right time zone for where you're at, because you want to have the correct times. Remember, we're just looking for news that affects the sterling or the dollar. So we had a few. At 4:30 we had, you could see a few news events for the sterling with this total trade balance and all this stuff. And then if you see we have this NBA mortgage applications and the UK pre-budget report. Those aren't that important, you know, as far as news events go, so I just kind of disregarded those. And not every news report you're going to have to be wary of. There's just certain ones. And the big times that you'll notice are 4:30, 8:30, 10 a.m., 2 p.m. Those are all Eastern time, by the way. But those around those times are usually the ones that are important. Not all. Remember, that's not an absolute rule, but usually. So in this case, the 7 and 7:30, I'm not going to note that. At 10, I will note, though, that I have wholesale inventories, and then at 10:30 I have the crude oil inventories. So 4:30, 10, and 10:30 a.m. Eastern time were the times I was watching out for. And again, I'll try to post those in the blog for the ones that I am paying attention to. But again, you want to verify that for yourself. Don't just depend on the blog, because, you know, if something happens and you don't have the blog anymore, you want to be able to be self-sufficient. But it should be used as kind of like a guide and should help you along the way when you start to determine what news events are important. Okay? So again, to recap, I'm writing down 4:30, 10, and 10:30 a.m. Eastern time on my notepad. You can do the same, or you can set an alert on your Outlook calendar or some kind of alarm just to let you know when those news events are coming out, because you don't want to be in during those times. Okay, so now that I have my news events ready, I know I'm looking for short trades. I can begin my trading day. So what I'm going to do is just move my chart forward one candle at a time, and this will simulate a day, and I'll kind of go through my thought process along the way so you can see what I'm thinking of as the market is moving along. Alright, so here we got a big move to the downside. This is at 1:15 a.m. So crossover there. RSI is definitely below 50. Stochastics are trending down, and MACD has gone from positive to negative. This is a valid entry. Now you want to enter at the close of the candle or as close to it as possible, and in this case it's 62.19. Your stop is going to be at the most recent swing high, which is at 62.74, and our target's at the near 0 or 50 level, which is in this case 6,200. That gives us about 19 pips of potential profit. Now I know what you're thinking, man, that's a horrible reward to risk ratio, and it is, and most of the times it is during our trades. But remember, risk to reward ratio, or your R value, that just tells you, that just gives you an idea of how often you need a win on your trades for you to still be profitable. Now in this case, since we're winning probably about 70% of our trades, it's okay to have less than 1 on our reward to risk ratio. Now, if we were winning less than 50%, then it's important that our reward to risk ratio is over 1, so that we can make up for all those losses. So in this case, it's still profitable, and it's still okay to have a below 1 reward to risk ratio. Okay, just wanted to point that out because that is a question that comes up frequently. So now I'm in the trade, 19 pips of potential profit. I'll just let it run. You see the very next candle we're hit. Now momentum didn't continue in our favor, so you just want to close out your trade as close as possible to 6,200. I didn't get out right at it because the market was moving, bouncing up quite quickly from that level. So I got out at 6,205, and that's okay. You just want to use those levels as kind of an alert or a mark to look at. And you can see that the market did continue to go down in that case, so we kind of missed out a little bit there, but that's okay. Just jot that in the books and continue to move forward. Right now it's about 4 a.m. I know news is coming out at 4:30, and there it is. So now we're moving along. I know our next news event isn't until 10 a.m. So we have quite a while. Right now it's about 7:30. This is 8 a.m. and 8:15 here we get another crossover. Let's take a look at the indicators. RSI is below 50. Stochastics are trending down. Now let's look at MACD. MACD is negative, but let's see what it was the candle before. You can see that it was already negative during the 8 a.m. candle, and so therefore that would cancel out the entry. So you would not want to enter here because MACD was already negative. Okay, so all three indicators have to match up, and so you don't enter on this case. So you just let it go by. And unfortunately, you could see that what a nice bearish move there. And again, human nature is to be like, oh man, I should have just got into that trade. And you know, maybe I could fib on MACD, you know, and next time. Trust me, you don't want to start doing that because that is what gets you into trouble. I've been there, I've done that, and it hurts more than it helps because you start changing all these rules because you see you missed something. But the fact of the matter is that you're gonna miss out on trades. But a lot of the times, if your rules are right and it's been tested, those rules are more often or not gonna save you from losses. So don't look at what you missed, look at what you potentially saved. And in this case, we did happen to miss out on that nice move. But again, you can't think on the short-term basis. You got to think overall and long-term. Okay, so nothing going on there. And again, that's pretty much the rest of the day. So we just had one trade, one small victory, but again, a small win is still a win, and it still adds to your bottom line, and that's something to be happy about. And if you're trading the system correctly, that's also something to be very happy about. So if you went through this video and you noticed that you were thinking similar to me, then you should feel good. Don't feel bad about missing out on those trades, okay? There are always trades out in the market. Trust me, you will always see them, and you will catch those big ones. It's just a matter of staying in the game, adding those small wins, keeping your losses small, and then hooking those big ones when they come around. It's like surfing, catching that perfect wave, okay? You just got to sift through the bad ones, and then when the time is right, you pounce on those good ones, okay? Alright, so that's it for today. Feel free to ask questions on the blog or in the forums if you have any, and I will see you all on the next update. Cowabunga, dudes!